All right, it's October 27th, 2025. The market's sitting at a fragile peak, and don't let the record highs fool you. There are some serious risks building up right under the surface. Here's how we need to be thinking about the next 1 to 2 weeks. The number you need to have burned into your brain is $7 trillion. That is an enormous pile of cash sitting in money market funds, just parked on the sidelines, earning a little bit of yield, and waiting for a reason, any reason, to move. And that creates this huge conflict we're seeing right now. Record market highs clashing with record investor caution. That $7 trillion is like a coiled spring. So the question for us is pretty simple. What are the hidden risks keeping that cash sidelined? And more importantly, what could finally unlock it? Okay, let's dig into the news that's actually driving this environment. The two big themes you'll see are contradiction and just extreme concentration. First off, the market breadth is just terrible. This rally is dangerously narrow, and it's all being propped up by a handful of mega-cap tech stocks. Second, inflation isn't going away. We're seeing things like beef prices up 13 to 17% year over year. That makes it a political problem. And third, the political response to that problem is just total chaos. We've got proposals to both tariff and increase beef imports at the same time. For us traders, this uncertainty is exactly what creates volatility. And volatility, well, that's opportunity. Now, these headlines are really just symptoms of much deeper risks. So let's take a look at the cracks that are starting to form in the foundation of this market. The first major risk, and you have to be watching this, is in regional banking. The smaller regional banks have over 30% of their entire balance sheets exposed to commercial real estate. Now compare that to the big banks. They're sitting at under 6%. This is a huge, concentrated vulnerability just waiting for a catalyst. And this is the logical next step, the follow-on risk. If commercial real estate loans start to default, it's going to force these regional banks to tighten their lending standards across the board. That leads straight into a credit crunch, which will slow down the entire economy. This is the absolute key domino to watch. The second risk is something a lot of people aren't talking about: data integrity. We've got a crucial CPI report coming up, but you've got economists, like this one from the Heritage Foundation, literally calling the data a guess because of issues at the Bureau of Labor Statistics. Think about that. If the market can't trust the inflation data, then the Fed is flying blind, and that just means extreme volatility is on the table. So, let's translate all these macro risks into some actionable sectors and specific tickers. This is where the pressure is really building up. For regional banks, you're watching the KRE ETF. The key support level is $45. If it breaks below that, that's a major warning sign. For beef processors like Tyson, ticker TSN, the policy chaos makes it a pure volatility play. Alternative meats like Beyond Meat, ticker BYND, could get a lift from high beef prices, but let's be honest, the product itself has its own issues. And finally, the QQQ. It's still a concentration risk. If those leaders start to falter, they can drag the whole market down with them. This content is for educational purposes only. It's aggregated analysis from multiple public sources to help you stay informed and improve your own decision-making. Do your own research. This is not financial advice. Okay, with that context, let's build a tactical framework. Here's how to think about positioning over the next 1 to 2 weeks. My base case is for choppy, range-bound action. The data is all over the place, so the posture has to be defensive. That means maintaining higher cash levels and using defined risk options. The bull case gets triggered on a clean CPI report and a stable KRE. That's the signal for that $7 trillion to maybe start moving. The bear case, that's a hot CPI print and KRE breaking that $45 support. So the bull thesis is simple. A clean inflation report takes a huge weight off the market. Fears about regional banks calm down. That $7 trillion in cash finally gets nervous and starts chasing the rally, which would broaden the advance beyond just tech. But this thesis is immediately dead if CPI comes in hot or KRE breaks down. Now, the bear thesis is that these risks start to cascade. Sticky inflation forces the Fed to stay aggressive. At the exact same time, commercial real estate stress finally cracks the regional banks. That triggers a credit crunch and a broad market sell-off as risk gets repriced everywhere. The only thing that invalidates this is a sudden dovish pivot from the Fed or if we see credit markets clearly stabilize. Given all this uncertainty, any positioning right now should be risk-defined. So here are a few potential structures based on this analysis. If you're looking at a bearish thesis on regional banks, a bear put spread on KRE is a way to target that downside risk from CRE. To play for just a big move either way or on the CPI print, a neutral straddle on the SPY could capture that explosion in volatility.
And for the policy chaos around a name like TSN, a directional debit spread gives you a defined risk bet on the outcome. Notice, each of these has a clear point where you know you're wrong.
And a final critical note on risk. Remember, with options, all your capital is at risk. And with certain strategies, your losses can actually exceed the premium you paid. So you always start with small, pilot-sized positions. You only add to that position if the market starts proving your thesis right. And most importantly, you respect your invalidation levels. Discipline is everything. The market is sending two very different signals right now. One path leads to a strong rally. The other leads to a sharp decline. The question isn't which path it's going to take. The real question is your plan ready to handle both? Not trading advice, just a market update to keep you informed. Markets carry risk. Trade your plan, manage downside, and verify all data.